As I'm sure you can imagine, these Bitcoin ETFs are all very similar. The main differentiator between them, since they all own 100% allocation of Bitcoin, is going to be the fees associated with them, as well as any fee waivers that might be in place as an incentive. GBTC, which is the Grayscale Bitcoin Trust ETF, is the most popular Bitcoin ETF. They were also the first ones to offer a Bitcoin Trust investment, and then since the ETF approval, they converted this into a Bitcoin spot ETF. They own an astounding 308,593 Bitcoin, and this amount changes based on their total assets under management. But when it comes down to the fees, this fund has the highest expense ratio by far out of the top 5 most popular options, coming in at an expense ratio of 1.5%. IBIT, or the iShares Bitcoin Trust, is the second most popular Bitcoin ETF, and as of April 17th, this fund owns 272,844 Bitcoin. From a fee perspective, this comes in much lower than Grayscale at an expense of 0.25%. Now, iShares did have a fee waiver in place for the first $5 billion in assets under management, whereas that fee would be reduced to 0.12% for the first year, but since then, this fund has now reached more than 3 times that in total assets. Next up, we have the third most popular Bitcoin ETF, which is FBTC, the Fidelity Wise Origin Bitcoin Fund, and this ETF still has a fee waiver in place. Fidelity is waiving the 0.25% expense ratio associated with this fund through the end of July for everyone, meaning that the fee is going to kick in on August 1st of 2024. The fourth most popular Bitcoin ETF is ARK-B, the ARK21 shares Bitcoin ETF. Now, this ETF has an expense ratio of 0.21%, which is slightly less than Fidelity and iShares, and a lot less than Grayscale's 1.5%. And finally, the fifth most popular Bitcoin ETF is BITB, the Bitwise Bitcoin ETF. Now, this ETF has an annual expense ratio of, wait for it, 0.2%. So it's just slightly less than the others out there, but it might be a differentiating factor for those who are very sensitive to fees. Now, they also had a fee waiver that was in place for the first 6 months, whereas the first $1 billion that was invested into the fund did not incur the fee, but since then they have reached more than double this in total assets under management.